Well, expecting the worst while preparing for the best forces you to invest with room for error, but it also psychologically prepares you for the inevitable disappointments. And I think as we talk through those, it should give people confidence that in a decade's time, in 2034, we're going to be still living in the best country in the world. It's really important to understand where the demand drivers are, because what pushes up values in the long term, we think as investors.
Welcome to Perth Property Insider, where you will learn how to grow your wealth and improve your life using Perth property. Our show is brought to you by Investors Edge Real Estate, the highly rated and award-winning property management, sales and buyers agency servicing the whole of Perth. Now, here's your host, Jared Mann.
Today, I'm really excited to have Michael Yardney, one of Australia's top property and strategy experts. And I really wanted to get him on the show because there's a lot of, noise continuously in the media, and it's hard to know, what to pay attention to. But Michael's got a really great big picture view of some of the things that we can look to expect over the next decade and potentially call them forecasts, and some of the things that are going to stay the same. So we're going to cover off 10 of each of those today. And I think most importantly is the psychology of how we approach this next decade. So I'm excited to get into things. Michael, thanks for joining us.
My pleasure. Thanks for having me back, Jared.
So how should we be thinking about this next decade as a property investor?
Well, I'm continuously asked in the media, tell me what the next 10 hotspots are going to be. When do you think interest rates are going to rise? When do you think interest rates are going to fall? When's the next property boom going to end or start? When's the crash going to come? Because I guess they're the headlines the media wants, Jared. But I tend to disappoint the journalists by telling them I actually don't do forecasts. Instead, I have expectations.
Well, it's a different way to think about it, isn't it?
Yeah, so I expect that we're going to have another recession in the next decade, Jared, but I don't know when that's going to be. I expect some of my investments won't do as well as I'd like them to do, but I don't know which ones they are. I expect the property market to rise for the next couple of years, and then it's going to peak and it's going to fall again. But I don't know when the current upturn phase of the property cycle will end. I expect interest rates are going to remain high for a while longer and then start falling. Probably not until maybe the last quarter of this year, but to be honest, I don't really know when. And I guess I've learned that every decade or so, the world breaks, so we're going to have another financial crisis of some sort, but I've got no idea when. Now, Jared, these aren't contradictions. It's not really a form of cop-out. You see, there's a big difference between an expectation and a forecast. So the expectation is the acknowledgement of how things worked in the past and are likely to happen in the future. On the other hand, a forecast is putting a time frame to it. So, of course, in an ideal world, we'd love to be able to forecast what's ahead for our property market, and we want it with a level of accuracy, but we can't. There's just too many moving parts, and boy, all the wrong forecasts over the last couple of years have shown that's to be the case. Sure, there's all those statistics that are easy to quantify, but what's really hard to identify is exactly when and how millions of strangers are going to react and respond to the prevailing economic conditions, political environment, and what millions of other Australians are going to do. There's always X factors. So it's actually made me invest differently for myself and for our clients personally, because if you've got an expectation without a specific date, a specific forecast, I expected the last property boom to end. Now, I didn't expect COVID. That's one of those X factors. But when things happen, I was prepared for it. I had financial buffers. I owned the right sort of assets in the right entities, and it didn't shock or scare me when things like that crept up, Jared.
Yeah, well, that makes a lot of sense, because even when we see the other so-called experts making these predictions, they can be incredibly disruptive, and it just goes to show that they're wrong on so many times, and this can really throw off our investing if we actually start to follow them too.
Well, expecting the worst while preparing for the best forces you to invest with room for error, but it also psychologically prepares you for the inevitable disappointments. So you said you're going to ask me about what's going to change and what's not going to, and I'll put some thought to that as we talk about it. But again, knowing that things are going to change, it means that you invest differently. So there's a huge difference between I expect the next property downturn sometimes the next decade, and I expect it to happen in the second half of 2026. But I believe it makes me a much better investor thinking that way.
Well, we don't have to go into timing things perfectly then either. And I think a lot of people, investors get stuck in that trap, don't they?
Sure. So while early 2023, in fact, late 2022 being on the ground, we saw a lot of signs that the property downturn of 22 was ending and the property market was going to pick up. Even with all that, I didn't predict or think the market was going to be as strong in 23 last year as it was. And in fact, at the beginning of this year, we had some thoughts about where the market was going to end up in 2024. But boy, has it already shown us that a lot of forecasts are wrong. Some segments of the market, some states are outperforming expectations and others are underperforming. Perth's one of the markets that is well outperforming at the moment, isn't it?
Yeah, certainly hot over here. But like you say, I know it's going to come to an end. I just don't know when. And I'm going to be prepared for that, both with my property investing and my business. So that gives me a great sense of security. So,
yes.
So I want to ask 10 of the things that are likely to stay the same that you think is going to stay the same.
Okay, so everyone wants to know what's going to change, what's going to be different. But let's look at some of the fundamentals that will stay the same, because I think as we talk through those, it should give people confidence that in a decade's time, in 2034, we're going to be still living in the best country in the world, and that the value of your house and my house and our investments is, if we got the right ones, going to double. And I think one of the things that's going to continue to drive our markets and stay the same is our population is going to keep growing strongly. There's lots of news about that at the moment and how we've getting too many people into Australia. Some of them are migrants, some of them have temporary visas. But I believe both sides of the government have got a business plan for Australia to get to something like 40 million people from the 27 million people we are now by the middle of the decade. It's to do with our aging population. Over the next decade, more and more baby boomers are going to retire. In fact, most will have retired by then. Maybe even I will by then, Jared. But what that means is we need more worker bees, so to speak, who are going to be paying taxes to help pay for the pension system, the health fund system, the aged care system. So going forward, even if the government lowers the level of student and temporary visa immigration, high migration levels and strong population growth set to remain. And that'll be a key feature that drives our housing market in both rental accommodation and, of course, houses to buy. Of course, most of those people coming from overseas, because let me say then, I should have maybe explained that a large part of that population growth, Jared, is going to be from immigration, because we're not making as many babies anymore. And so that means that all these new people, immigrants in particular, will rent for the first couple of years, but then they're coming here with the aspiration to own property, with the aspiration to live the way the Australian lifestyle is. So that's just going to underpin the demand for properties, initially for rent and eventually to purchase.
Well, it's certainly going to underpin all the capital city markets and gives me a lot of confidence as an investor with that kind of backdrop.
Well, it's the demographers who are planning this are suggesting that even though some are going to go to regional Australia, the majority of the immigrants are going to come to the four big capital cities, Perth's included in that. So Melbourne's going to get the majority, or it's more than its share, Sydney, Brisbane and Perth. So there's going to be a big drive of people coming in. And that's going to, I guess, lead to one of the other things that's going to stay the same, more congestion on our roads. Now, it's been shown overseas in big cities, they're livable despite having large populations, as long as you've got the right infrastructure and in particular public transport, because we know the government has set a plan for building 1.2 2 million new dwellings. And we know it's not going over the next 5 years, and we know it's unlikely to be achieved, but a lot of that's going to be medium density dwellings. So when people come, and high density, so if a visitor comes to Australia in 10 years' time, in a decade, they're not going to recognise what Perth looks like anymore. They're not going to recognise what Melbourne, Sydney, Brisbane looks like, because how we live and where we live is going to be very different. And boy, there's going to be a lot more cars on the road.
Well, perceptions are going to have to change, and I'm not sure what you see in the other capital cities, but Perth, for a long time, people haven't embraced that higher density living. But now that we've got migrants, we've had one of the highest population growth percentages over the last year, the highest of all the capital cities. We've got a lot of people coming in with different expectations that are embracing that higher density more, and they're going to have to, aren't they?
They're going to trade backyards for courtyards and balconies. I believe townhouses are going to become more the style of living, where people are going to want to have big modern accommodation but on compact blocks. And that's going to mean neighbourhoods going to be very important in the future too. So I think, putting the couple of things we've already just said together, one of the things that isn't going to change is property prices are going to continue to increase. I mean, that's happened since Federation, and property values in our inner and middle ring suburbs of our larger capital cities, where the locals are going to be relatively wealthier, have more disposable income. I think they're going to keep increasing proportionately more than the lower socioeconomic areas. The poor are going to live further and further out. They're going to have to, because the rich don't like to commute, and they're going to continue living in the leafy inner suburban suburbs, those nice suburbs around the Perth River and around the Perth CBD. But yes, those suburbs will change, and there'll be more medium density and, to a degree, high density living there.
But yes, I agree that with those solid fundamentals, we can only see one direction for property over the longer term. So that's encouraging as well.
There is. I guess one of the side thoughts about that, though, is there's ways of outperforming the averages. So while the average property in Perth, and in fact in all our capital cities, is going to go up, not all will do the same. So it's really important to understand where the demand drivers are, because what pushes up values in the long term, we think as investors, but it's really owner-occupiers to a degree. So you want the sort of property that owner-occupiers are going to want to buy with their hearts, not with their calculators, like an investor does, and where they're prepared to pay more, and where more affluent tenants are prepared to live. Because as investors, we've got to remember that our future income is dependent on our tenants' ability to keep paying rent and keep paying higher rent over the years, and so therefore the demographics are going to be very important. But another thing that's not going to change over the next decade is the requirement to build, I don't know, close to 250,000 new dwellings each year, 250,000 dwellings in Australia, just to keep up with the demand, particularly since we're now undersupplied. Look at the vacancy rate. And I know you manage a lot of properties for investors in Perth, and we know how tight the rental markets are and how there's a shortage, and there's very little new coming in the pipeline, because currently it's not viable to build new developments with current market prices. And so in due course, the cycle will move on.
Well, you'd be seeing that in the other capital cities as well, Michael, wouldn't you?
Oh, yes, it's all around Australia. It's not a Perth-based issue. The trouble is, because it costs a lot more to build, and building high-rise apartment towers, like our federal government said, hey, we want you to build all these in all the capitals to get people in. That's the most expensive way of building, Jared, because you want land that's more expensive in the middle ring suburbs and the inner ring suburbs, and a building construction style that's more expensive than building single-story or double-story dwellings. So it costs too much to build. But we've seen the cycle in Perth and in the other states before too. And when eventually values go up, when eventually there's too much demand, values will go up. And that's also going to drag up the value of established properties. And this big differential between apartments and houses to one degree and established properties and new properties means that buying the right property today is going to give, and you're going to buy it with quite some inbuilt intrinsic value. You're buying below replacement cost if you get it right.
So what else do we think is going to stay the same? Because I think we've covered off 4 things so far.
Well, another one is the property cycle is going to continue. being in Perth, you know yourself, there's periods when there's flat, minimal growth, periods, in fact, when property values drop, and then periods when the cycle moves on again. And the long-term trend is up, driven by owner-occupiers, but the cyclical ups and downs will be driven in some ways by investors, investor booms, investors pull out, and when things are a bit difficult, they fall prey to fear and greed. So the cycle is going to go on. And what you said a couple of minutes ago about you being prepared for the next stage of the cycle is important. But again, if the long-term fundamentals in my mind are strong, partly because the next trend that's not going to change is Australians are going to continue to aspire to home ownership. It's the way we live here. 70% of Australians, it's a bit less than that now, but for a long time, more than 2/3 of Australians have owned their own home. Very different in Asia, very different in Europe. And the immigrants coming here, as we said earlier, a lot of them have got the aspiration to own a home. That's one of the reasons they come here. And more of us are going to be moving into, as we said, medium density and high density living apartments and townhouses. But I think the desire to own a home is not going to go away, Jared.
No, and what I'm seeing is that as rents continue to go up as well, that's really encouraging as many first-home buyers to make the move and get into their own properties. And we're seeing a lot of that transition from tenants to first-home buyers at the moment in Perth. And
we're seeing that around Australia. It's partly the aspiration, partly the fact that when rents are as high as they are, almost at the cost of the mortgage, it actually just, it's not the serviceability of a mortgage that's the problem, it's getting a deposit. But more and more mums and dads and now grandmas and grandpas are helping people get on the property ladder, Jared.
Well, the first home buyers deposit scheme's been heavily embraced as well, especially here in Perth. And a first home buyer can, borrow up to 95% and not have to pay lender's mortgage insurance. So that has helped lower those barriers and, enable people to get in sooner. And not only with a lower deposit, but also without paying that, large amount of lender's mortgage insurance that they previously would have had to. So,
well, the government knows that it can stimulate the economy and stimulate the building industry by giving first homeowner grants. I think one of the other things that is likely to change, it wasn't on my list, but let me quickly pull it forward a bit, is stamp duty, because stamp duty is one of the big barriers for first homeowners to get into the market. And it's also a barrier for downsizers to leave. I've got this big home, my kids have left home, and for some people, unfortunately, their partner is no longer alive, but they still live in the big home that they really don't need. The only way they downsize is when they get taken out in the little box. At the end, it's a form of downsizing that none of us want to do. But because part of it is related to the fact that I've got to pay the government all this, not capital gains tax because it's my home, but stamp duty on the next one, and people don't like doing that. So the government would encourage more first home buyers in, and a transition to getting the right sort of dwelling mix by getting rid of stamp duty. But maybe that's one of the things that isn't going to change also, because the government likes getting its money from it, doesn't it?
The state governments are very precious about their stamp duty and transfer duty. So I think, will pressure ever get enough, and this rent crisis of property ever get enough to cause them to make the change? I guess that's remains to be seen.
Well, we'll see how much political pressure is. I think one of the things that won't change is ordinary Australians are going to want to continue to invest in property. It's much, again, part of our ethos here, more so than in other countries overseas. And that's partly because Australians love property. That's not a good reason to invest. That's actually probably a bad reason to invest. But a lot of them want to secure their financial future because they know the pension isn't sufficient and dog food doesn't taste very good in retirement. So therefore they're looking to secure their financial future, understanding that property investment's a great, reasonably safe way to get potential growth and rental growth over the long term.
Yeah, definitely.
The other change, I think, or the thing that's not going to change, if you go on social media, there's always going to be the property pessimists around. They're telling us not to invest. The markets are too expensive. The market's going to crash. My kids will never be able to afford property, so the property values can't come up. That's been going on. Look, I first remember that after the boom of the 1980s. I've been investing since the 1970s, and maybe my recollection isn't good enough, or I wasn't paying attention as much then. But in the 80s, there was already the boom and bust scenarios and the story about don't get into it, because everyone's got a story about somebody who bought the wrong property. Look, we know, in fact, 50% of investors sell up in the first 5 years because they get it wrong. But that's not a reason not to invest. And my suggestion is don't listen to the pessimists. And also, maybe the last thing that I assume is not going to change is there's going to be the property spruikers and the get-rich-quick artists around to take money from naive property investors looking for a shortcut to get rich in real estate. Only yesterday I was doing what I shouldn't be doing, but scrolling through Instagram. And Instagram's algorithm obviously knows I like real estate. So I get all the property spruik messages on my Instagram feed in between the nice things that I'm trying to follow. And Jared, I can buy 10 properties in 10 years. Actually, I can probably buy 7 properties in 7 minutes, they tell me. And I don't need any money, Jared. And I actually can bypass the banks, and I can take advantage of distressed buyers at the moment. The stories are always there. And unfortunately, the landscape is littered with people who've lost money by people like this, who, in my mind, are selling tickets to see unicorns. They don't exist.
Well, I'll tell you what I've noticed, Michael, as the Perth market has heated up, and I'm sure you've seen this every time the cycle goes around, all of the new spruikers come out of the woodwork and their ads are all over Facebook. And then when the market starts to cool off and disappears, these people won't exist in another few years. So,
well, I believe the Perth property market is going to do very well over the next couple of years, and it'll almost certainly be the strongest market in 2024. I also know that most people who invest in Perth are going to get it wrong, because a lot of them are using the East Coast buyers agents who don't even go there. I was speaking to somebody recently who buying a house and land package in Perth, and they paid money to get into this scheme, and now they're actually paying the builder's loan for him to construct it. And I said, so what did this buyer's agent who put you into this charge? Oh, they charged me $8,000 up front, but nothing for doing the whole deal. And I said, why? Who do you think pays them? And they said, maybe the developer. And I said, so you're the product, you're not the purchaser. Now, I also know, and we spoke about this off air a couple of minutes ago before we started, that for a good mutual friend of ours, you bought a great property in Perth because you know the market, because you know the agents there, because you're able to get something off market. So my recommendation would be anyone looking to buy in Perth, be very wary. I'm not saying being wary of buying in Perth, but be wary of whose advice you take.
Yeah, well, thanks, Michael. It really does make a difference having the local, intimate experience. And we've seen what happens when the market goes down as well as when the market goes up. So, that experience is fresh in our mind and informs all of our purchase decisions. So let's go into 10 of the things that might be different over the next decade.
Well, I think the first one is, we talk a lot about property investment being a game of finance with some houses thrown in the middle. I believe we're going to have a period of higher interest rates. Now, when I first started investing, if my home mortgage was below 10%, I was really happy. Now, I got different yields for my investments as well, but that was the standard. Interest rates were higher in the 70s and 80s. And in fact, in the early 90s, there's all those stories about, and for a short time, my interest rate did get in double digit. But I believe over the next couple of years, even though interest rates are going to drop, and probably later this year, that's been pushed away further because our economy is doing a bit better, the markets are doing a bit better, the property markets are doing better, unemployment's lower than the Reserve Bank wants, but they're going to drop them, but probably to, let's call it to neutral levels. In other words, not stimulatory like we had during COVID, and in fact prior to COVID, where the Reserve Bank was trying to bring inflation to the 2 or 3% band. But at the moment, they are the opposite of stimulatory. They're trying to slow us down. But the interest rates are probably going to drop, 1.5%, 1.25%. But the next decade, overall interest rates will be a little bit higher than they were in the decade prior to this.
Makes sense, Michael. And we can already see economists sort of backtracking as to when the exact timing of these might be. And, it's anyone's guess really, isn't it? So as we said earlier, be prepared for them to remain higher for longer and then you won't be surprised.
Sure. I think another trend that's going to change is rents will grow strongly. With owning a lot of investments in Melbourne, had a period, and Brisbane, I had a period where my rents didn't keep up with inflation over a decade. In fact, during COVID, in general, rents went down. And in fact, for many years, I should say, there was periods when I couldn't increase rents at all. So having said that, I believe this is going to be a decade of much stronger rental growth because more immigrants are coming in wanting to rent. It's going to be a bit harder for owner-occupiers to get put in the property ladder, like we said a moment ago. And there's just a huge undersupply at the moment. And despite the fact that the government's encouraging developers and there's going to be build to rent and the local councils are saying, yes, we're going to allow more development, it's going to be quite some time before this happens, and the huge deficit in housing won't be fixed any time soon, which is going to ensure vacancy rates remain low. So it's not ugly, greedy investors taking advantage of the market. It's the market forces related to decisions that were made way back in, or maybe 8, 9, even 10 years ago when APRA's got involved, when investors are paying higher mortgages for the rates than interest rates than homeowners, when the government stopped foreign investors helping underpin the development of high-rise towers. So there's unlikely to be a relief for tenants, but that, on the other hand, that's going to be good for investors because 90% of all rental accommodation is provided by, let's call them mum and dad property investors. That's probably a derogatory term. It's just Australians being rental property providers, service providers, looking after their future.
Yeah, well, I have appreciated your team continuing to increase the rents in line with market on my properties in Brisbane and Melbourne. And, you really did need a good property manager to do that in a way that's respectful with your tenant and manage that relationship. And that's what we obviously do here in Perth as well. And it startles me still when we take over managements from other agencies all the time and the property's just drastically under rented. So certainly not how I would run my investing business for a landlord.
Well, beginning investors don't appreciate the investment in a good property manager. They see it as a cost rather than investment. You and I as investors, but also as owners of property management businesses, understand that, like in every business, there are good, bad and indifferent ones, and you get what you pay for. If somebody can do it much, much cheaper, something's got to give. And it's actually hard to get good property managers. I know it's an area that you enjoy. It's something that Pam, my wife, started to build up at Metropole, but it's challenging industry, and to get good people in it, you've got to pay good wages, and so it just has to be paid somewhere. But the dividends get paid by investors having trouble-free investments. So as we talk about things that are going to change, I guess, unfortunately, lower levels of home ownership are going to creep up over the years. Over the years, Australians' ownership dropped from 70% of all Australians owning a home to a bit less, and we're in the high 60% now. Again, a lot of this is going to be related to immigrants coming in, renting initially, and then eventually buying a property. But it's going to get a bit more like overseas, more tenants, more people being tenants all their life. There are opportunities to get into the home market, but not everyone's going to be able to take those. So that, again, gives some security and safety for your and our clients who are property investors.
Yep, well, we'd have to expect that to happen.
One of the other changes, partly because of the cost of accommodation, partly because of the cost of rent, and partly because of the demographics, is that I think over the next decade, household sizes on average are going to increase. So there's going to also, it's partly multiculturalism, but it's also partly the fact that there's going to be multi-generational plans. Jared, when I came to Australia, I came here at the age of 3. My parents were young. I was young, maybe. We lived with my grandparents. A lot of migrants did that. This happens again now also, that a number of generations live together. And so that's also going to mean that the sort of accommodation that's going to be in continuous strong demand is going to change. There'll always be room for one-bedroom apartments, but I think that the sort of property that will be in strong demand for homeowners and also investors is going to be 2 and more likely 3-bedroom homes and family-friendly apartments, not the sort of high-rise towers that in particular in the last property boom were built in the capital cities of Melbourne, Sydney and Brisbane. Perth missed out on that a bit, those shonky towers that were built out of paper mache.
Yeah, we escaped most of that trouble that you've had. But to your point on parents living with their children, I'm probably expecting one or both of our sets of parents to land on our doorstep at some point because they didn't do the property investing and other stuff. It just wasn't, as popular or, these days, well, there's many podcasts, many books, thousands of ways for us to model this and learn about property investing. But, back in their day, they were lucky to have, one book to read. And I don't know how you originally came across investing, but for them, they were introduced by me to it, and their investing came probably a bit too late. So they don't have the asset base that they otherwise should or could have had. So,
well, when I started investing in the 70s, there were no books in Australia. There were a couple of American books. There was 1 or 2 came out in the early 80s, which I've still got on my bookshelf as a memorabilia. Jan Summers came up with her good...
Yeah, I've got a few Jan Summers ones from way back.
Basically, my parents' friends, who were migrants also, they were rich. They owned businesses and they invested. My parents didn't. So my friends' parents, who were my parents' friends, to be blunt, they were wealthy. They went on holidays. They had a car. My parents didn't until my sister came around. So the bottom line is I wanted to be like the rich people were. So I saw that some people invested in real estate and didn't really understand how. I just lucked out and got the first property in the right spot at a good time when Gough Whitlam came into power. The Labor government and inflation boomed, and my $18,000 property that I went halves with my parents and I got $12 a week rent just kept going up in value and I could borrow again.
Well, thankfully for me, Rich Dad, Poor Dad just came out, or at least I came across it when I was 16. So that gave me my different dad to mentor as opposed to my more poor dad. So
on the one hand, we said there's going to be more multi-generational, bigger household sizes, but with our ageing population, there's going to be another trend at the other side, Jared, where more of us are going to live alone. We're living longer. We're living to the stage where more Australians are living in their 80s and in their 90s. And there's going to be more women, sadly, living on their own as their husbands die. One of the interesting trends, though, as the baby boomers do die, is most of them own their own home without any debt because they bought it many, many years ago. There's also going to be a huge intergenerational transfer of wealth to the children and grandchildren of these baby boomers. That's going to happen over the next decade, at the end of next decade, really, in the middle of the 2030s, even though a lot of baby boomers are now deciding to give the money with a warm hand now rather than the cold hand when they're gone. And so that's why we're seeing the Bank of Mum and Dad help a lot of people, a lot of their kids into the housing market.
So one of the other things I thought of that could be very different and change things drastically is, where do you see AI and that fitting into?
Interesting. Well, various clever people have suggested that 30 to 40% of the jobs we currently know will disappear in the next decade. Now, I'm not worried about that because I believe other jobs will come around. And in Australia, just the way our economy is means we are still going to need a lot of manual labour. So Australia's economy is going to remain strong over the next decade because we do four sorts of things. We dig things out of the ground and sell them overseas. In Western Australia, your state in particular is dependent upon that in the mining industry. And yes, robots are going to drive the trucks and things like that, but I'm not sure AI is going to change that a lot. We actually, the number two way we do things is we grow things in the ground and sell them overseas. And Australia is going to be the food bowl, Asia in many ways. And both of those are not going to go away. So that's good for our economy. We also, an educational source, and some of it can be done online, but people are coming to Australia and to our universities on purpose for lots of reasons. And AI will change that a bit. And the other thing is tourism. So they're the four ways that Australia makes its money in general. And I'm not sure that people are going to want a robot to show them the Sydney Opera House or walk on the Sydney Harbour Bridge. So I still see there'll be lots of jobs around. But yes, I don't think we're going to have mass unemployment, but there will be, let's call it redeployment. I also think a trend over the next decade that's going to be different is more of us living in urban environments and high density living. We sort of touched on that earlier on, but that's going to be a significant change. And another big change is that the baby boomers, people like me, will have retired by the end of the decade. And as I said, that's we're living longer, we're working longer, though. Also, a recent study I saw only the last couple of days showed that the retirement age has gone up 3 years over the last decade. And part of that, Jared's because we're not doing as much manual work anymore. So you and I can sit in front of our computers or drive in our cars and look at properties, but it's not physically taxing. So we love continuing to work.
Do you think how they view retirement and like what they do during retirement's changing? Because anecdotally all around me, it is. You know, my dad has enjoyed going back and just taking a part-time job, doing the kind of work that he enjoys to do. And yes, it helps him out with his money and gives him a few more options. But, you know, he loves getting out of the house, loves having projects to do. Like, he drives my mum nuts when he's at home otherwise. So,
yes. Yeah. So baby boomers are not as keen to retire. They're not going into retirement villages either. They're staying in the same home. Or if they right size, they want to stay in the same neighbourhood, not tree change or sea change. They want to go to the same hairdresser, the same dentist, catch up with their friends. And so I think, I remember when I first went to America for the first time in the 70s, I was amazed in the 80s how many people in their 70s and 80s, age-wise, or 60s and 70s, were still working. They were serving you in restaurants. They were serving you in shops. They didn't stop working, and we're seeing a little bit of a trend of this too, started with COVID. So people are probably going to keep on part-time jobs, and why not?
Great.
I think the other change we've got to keep in mind is the demographic changes that are occurring. One is the baby boomers retiring. The other one is millennials moving to household formation age and making babies. And so they're going to start moving out of the inner city as they need more space to be able to have homes. And in fact, when they now going to move out and think of having children, one of the things is, sure, they want the right location, but the size of their accommodation is going to be important. They're going to be able to get away from a 1 or 2 bedroom apartment to, they're going to want at least 2 bedrooms, most likely 3. And also, they're probably a Zoom room, or almost everyone needs a media room or a room where you can work from. So there's the demographic changes and the drivers of how we want to live and where we want to live are going to affect the landscape of our property markets moving forward. And maybe the last change, and I don't really know how to quantify it, is we're going to be inundated with new technology we haven't even dreamed of yet. I mean, who knew about AI? I mean, those in the know have known for a decade or so, but you and I probably didn't even think about that more than 18 months ago, or those 3D goggles that people are wearing, or Facebook or apps or things like that. So I think we're going to have a lot of new technology. How will that affect you and me in real estate and investment? Don't really know yet, but it'll change. I guess one of them will be we'll have a cashless society. There's already talk currently about Armaguard having trouble making money, and there's not even people around to deliver cash to the supermarket. So no cash, I should say. We're still going to have money, and maybe not even credit cards. I don't use my credit cards anymore. I tap my phone or my watch, Jared.
Well, I think it's all very exciting because, the applications that might come out for research, we're already seeing AI and machine learning starting to change that space. And we, lend on that quite heavily as at the moment. And the speed of transactions, like at the moment, it's still taking 3 weeks to get finance approval and 3 weeks to settle, 6 weeks total in most cases. Imagine if we could do a handshake, do a thumbprint in the afternoon and have your property settled within a week. That would be certainly something pretty exciting and different for us all.
It will be different. Just like when I first started, we used to have to wait for the Saturday morning paper, and that's where the properties were advertised for sale. And all the information, because there wasn't CoreLogic and there wasn't blogs and there wasn't the internet, the information was held by real estate agents, because once a year the Valuer General, as it was called then, would release some property statistics of the sales that were so out of date then. So now one of the big changes is information is available for people interested in investing or buying a home. The problem with that, of course, Jared, is that you've got to be able to interpret it. Sometimes too much information is a problem as well.
We definitely see analysis paralysis every day with investors that we chat to, and a big part of what we're trying to do as buyers agents, and I know your team did it really well for me as well, is simplifying all of that into what is most important to make decisions with.
Well, I think, having been around the block a few times, I can see patterns in what other people see as chaos, because it's not exactly the same, but I've been around the block a few times. And on that basis, if we put all this together, I think in the medium term, property markets are going to be underpinned by the significant population growth we said, the jobs creation, because there is the requirement for jobs. All these people coming in are taking jobs, but they also need jobs because they're buying things, they're using goods, they're using services. And a lot of the jobs we're creating in Australia, Jared, are higher knowledge-based working jobs, more jobs that earn more. And so the increasing wealth of our nation, plus more of us, mean that as long as property investors have got a long-term focus, this current market's offering a fantastic window of opportunity, because we're still at the early stages of this new property cycle. Remember, it wasn't that long ago, 2022, all the markets faltered. They went backwards because of the beginning of the rise of interest rates. And in January 23, the market turned around. I'm not suggesting anyone tries to time the market, but taking advantage of this new upturn stage of the cycle has created significant wealth for others in previous cycles. I've seen it before. So I think moving forward, demand's still going to outstrip supply for some time to come. We're experiencing record levels of immigration. We're just not building enough. And at the same time, the cost of construction is going up, as we've said. So putting all that together, I think values are going to go up. But later this year, sometime, people are going to realise, hey, interest rates are going to go down. They're a bit worried at the moment. We know it's going to happen, but not sure when. It keeps getting pushed away. But when the realisation happens, or when APRA loosens the strings a bit and makes borrowing a little bit easier as well, consumer sentiment's going to rebound even more. I know it's quite strong in Western Australia at the moment, and that's great. And what that means is we're going to get back to the fear and greed, FOMO. They want to get in, rather than at the moment we've got phobia, fear of buying early, Jared.
Well, we only see the rents going one way, which is up to support all of that as well. And overall, we have to be very optimistic about what's ahead. But be prepared for the worst, as we relate back to the beginning.
That's right. But you can't just buy any property and hope it's going to be a good investment. And you and I know that. And that's where your experience on the ground in Perth, now as in the eastern states, is going to help clients, because over the past, as we've said earlier on in our chat, 50% of investors drop out of the market because they bought the wrong investment. 92% never get past their first or second property. But if you look at in the long term, if you're wanting to buy the next property to be the stepping stone for the next one and the next one, just buy quality properties that are going to be in continuous, strong demand over the long term by both owner-occupiers and tenants. And then take a long-term view. Don't be upset by the ups and downs, because they're going to continue to be there. Don't be upset by the pessimists. Once a year, come back and have a look and see how's it going. Am I in the position to buy again, do something again? If not, just hibernate. Don't treat it like shares of what's the price today, what happened to the auction results last weekend, has it gone up, has it gone down?
Well, thank you so much for joining me today, Michael. We've covered off 10 things that are likely to stay the same and 10 things that are likely to change, and I'm feeling a lot more optimistic about the future, and I guess that psychology of how to manage my own expectations for what's ahead.
Well, may I finish with one last thing then, Jared? One thing that won't change. We're living in the best country in the world, and we're living at the best time in history. And we, despite all the challenges and the geopolitical problems and the local problems as well, I wouldn't trade this time and this place for anything else.
We've definitely got to be grateful for that. Thank you, Michael.
Thank you for your time.
See you again soon.
I look forward to it.
Just a reminder, the information discussed in this podcast is general in nature. As we don't know your specific situation, you should always seek professional advice before taking any action. For free market reports on your suburbs of interest and other helpful resources to grow your wealth, make sure you join my property investor update at investorsedge.com.au/join. And finally, make sure you're a member of our Perth Property Investment Facebook group to be part of the conversation with other like-minded investors, get help to your questions, and get a feel for what's going on out there in the market. I'll see you in the group.